We detected an unusual trade worth $11 million on Expedia stock, ticker symbol EXPE. But here's what makes this even more interesting. Expedia is scheduled to report earnings in a few weeks on August 7th. And so in this video, we'll break down this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, at first glance, nothing stands out because the rich does not always want us to know what they're doing. But beneath the surface, our system detected something unusual. So we filtered out the noise and focused in on the January 16 options. And when we scroll down a little here, we can see more clearly that on July 10th, a series of trades all targeting the January 16 options at the 185 strike calls. These same call options were being traded multiple times, and they were also being traded at roughly the same price, around $22.35 per contract. Keep in mind that options are priced per share, and each options contract controls 100 shares of stock. And so to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each contract costs $2,235. And so to calculate the total cost this wealthy investor spent, we multiply the price per contract by the total number of contracts traded. And so how many contracts did they trade? Well, we can start by checking how many open contracts existed before this unusual trade was made. And so let's check the historical data from July 9th before this unusual option activity happened on July 10th. Looking at the January 16 options at the 185 strike calls, the open interest was only about 200 open contracts. And now that the data has updated, let's examine the current data on the option chain for the same January 16 options at the 185 strike calls. And we can see that the open interest has now increased significantly to 5,200 open contracts, clearly showing strong interest in these options. So this tells us that this wealthy investor opened new contracts here on July 10th, because it would not be possible to close out 5,000 contracts if only 200 open contracts existed the day before. And so, to estimate the change in new opening contracts, we subtract the 200 contracts opened previously from the current contracts that are opened, 5,200, which is 5,000 new contracts opened. And now we can calculate the cost of this unusual trade by multiplying the total number of new contracts by the price we saw earlier on the options time and sales tape of $2,235 per contract. And this equals a total value of approximately $11 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, Even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here at the 185 strike calls, since this was a new opening trade, we also traded these call options and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Because, based on our deep research across multiple variables and data sets, this wealthy investor bought these 185 strike calls for $22.35 each, the same price as we calculated and saw earlier on the options time and sales tape. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line over here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on Expedia stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here, the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break-even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $185, the stock needs to trade above $207 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here where you can also learn more strategies to boost your profits. Let us know in the comments. Do you think Expedia stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.